what does this mean? I mean, do we have to be fearful or not? Because actually you saw market correction, but markets don't seem to be fearful at all.
Right. In the absence of any apparent change in fundamentals or any profound rise in interest rates, which were contained yesterday and are unchanged this morning, we must be reactive to changes in sentiment and valuation and use history as our guide. So with the S&P closing Thursday at 2580, I don't want to be as negative as I was when I was substantially net short when the index was 2880 exactly 2 weeks ago.
All right. Will this spread to credit markets? And if it does, what does that mean?
I think we have to. It's a great question because that's the important thing to watch, which few people discuss. We have to watch the high-yield bond market, for example. But the fact of the matter is, if you look at junk bond yields relative to treasuries, they were at a multi-year low. So I think there's some room for an expansion in that spread. All
right. I think I'm seeing a little bit of cracks in junk bonds, right? How much time? And I know it's difficult.
Yeah,
timeline's very difficult.
In junk bonds after a move in which the difference between junk yields and treasuries were probably 650 basis points a few years ago, and they contracted to about 150, 175 basis points. So to answer your question, I think there's a little room for that spread to widen and still be unconcerned.
Doug Kass, we've got time for one more question this morning. You applied funds yesterday. You went long. Is there one sector where Kass has to load the proverbial boat this morning? Is it utilities or is it something more romantic?
I think what you want to emphasize are companies, I'm partially answering your question, companies that have recently beat expectations from the consensus, especially in the financial arena, which will benefit from a likely widening in the 210 spread and a likely increase in the absolute level of interest rates. So Hartford Insurance comes to mind as an inexpensive way of taking advantage of what's happened.